Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 20th, 2022. We're going to start with a quick check on learning and quiz. So I'm going to go through the numbered entries here, and you should be able to explain every markup that I have on the chart and how each of the markups and the indicators contribute to our trade frames. And you should be able to name, explain, and demonstrate what those circles are referring to. So 0 is the open of the day, right? So everything to the left of that is the pre-market. So number one, that yellow box is a standard risk box. That's the R10 for Nvidia, which is about 60 cents. And one of the things that I'm noticing here on item number 2 is that the consolidation areas where there's no directional movement looks a lot like an R10. So it's the size of a minimum manageable risk box shaping up pretty nicely here. So you get a couple of those in the pre-market. So when there's no directional move, it feels like that's a reasonable noise box. And now at 3, we have the OR3 entry framing technique where the market opens. We let the first 3-minute candle print, and then we get a breakout either above or below, and that actually turned out to be just about the MMRB. So we get the long entry on the breakout. At 3 is the entry for the OR3. 4 was the mechanical entry to the upside. 5 was the combination of a breakdown entry to the south side, and it just so happened to also be the size of the minimum manageable risk box. So that's 4 and 5 is the mechanical breakouts. 6 is that yellow dot. That's a place where I considered adding a second position. I didn't. You're going to see why in a little bit. I had a span of control. But 7 was also an area where I considered adding another position because each one of those was after a consolidation and then a breakout and represented about another 2R. So for the mechanical 2R entry that my brother likes so much. 8 is the same thing. 8 was an opportunity to add either a second or a third or a fourth position. 9 was a test of the PSAR exit. It came very close. I wouldn't be offended if you had taken the exit when it crossed through the dragon, when the price did. But I was trusting the PSAR on this one. At 10, if you had taken the exit at 9, then 10 would have been a 1, 2, 3 re-entry. Could have also been a fifth position. At 11, we get that second test, only this time you can see that the RL10, the 10-period dragon is rolling over, the PSAR is violated, and we take that one, we take the entry at 11, or the exit at 11, I should say. At 12, we've got another MMRB sideways quiet channel being established. At 13, that blue line means officially I'm stalking it. At 14, we have the breakout trade frame that I put in place, ready to trade that in either direction with market's money. And so a quick recap. We get a standard entry on this rascal at $121 even. The standard risk box for the R10 was 60 cents. The standard exit was at 126.50, meaning that we made $5.50 per share on that position. Divided by 60 cents is about 9.5 R. So give it a half for slippage and 1 for the kitty. So that's a 9R trade by the numbers. Standard entry, standard risk, standard exit. That's just standard work. And that comes from the night before's podcast when we talked about the potential for the semiconductors of having a great big breakthrough day to the either the upside or the downside, but we were ready for the semiconductors to pop today. And you'd have gotten this exact trade whether you used Texas Instruments, Nvidia, Intel, or Advanced Micro Devices. They all did this just like that. Just so happened that Nvidia was the fastest out the gate, and that was my target. So that's Nvidia. Well, why don't I get more positions on there? Because of the sniper trade of the day is this one. So we get a gap down. It reverses. It crosses up. It makes a PSAR flip. Takes out the previous high. I buy it with a standard risk box of 15 cents. It does nothing but go up. After this consolidation, I get 2.5 R in hand. I take the entry for the second position after the R10 wiggle. Another 3R in hand. I take the next extension up for a third entry, a fourth entry if the R10 wiggle. It just makes a standard rollover into the dragon. I'm happy as a clam on that one. That first move, those four positions, 16R, standard work, nothing abnormal about the results. It's just an abnormal mover on a normal day. I play the Kata 2 reentry for a quick scratch. I don't take the collapsing dragon right away. I take it the second time. I take the second position at the collapsing dragon here. Standard exit for another 3R. So that's a 19R day in U.S. Steel with absolutely standard work. Nothing unusual to see here. Plus whatever the other one was, 6 or 9, I forget what it was. So pretty good day at work. Again, U.S. Steel was in the metals. Now here's the case where yesterday we called out the semiconductors being extremely strong and a potential breakout, and then the metals all being extremely weak and ripe for a Godzilla move, which is either a big up or a big down. And right out the gate, big up, and there you go. So that's about a 25R day. Find the movers, trade the movers with standard work. Whoops. Sorry about that. Didn't mean to unshare that. Sorry about that. Are we back on with the screen share? I hit the wrong button. Yeah, I mean that's why you trade U.S. Steel. You know, that well-known growth explosive stock. You know, they make steel to make widgets. All right, so on the 30-minute chart, what we had today was, oh, now come on, work with me here. Why aren't you letting me draw? Stupid. It's not letting me draw. Okay, fine. All right, what we have here was a little bit of a gap up and then an immediate rollover in the S&P. Very tradable move. Closed weekly at 565. We're halfway back off the 10-day high towards the 5-day low and the belly of the dragon here. So this is a critical state ready to blow in either direction. You're either going to get this move or that move tomorrow. It's going to be large. It would at least come back, you'd think, to test here. Or test here. And if that breaks, look out below. And then if this breaks, really look out below. Shifting to the daily chart, you can see our 10-day look back here, out to 20 days, and then out to 30 days. There's our 30-day high, our 30-day low here. And today's little sell-off was part of the last couple days of weakness. It's testing the edge of the dragon, and if that breaks, I'm going to be short in a big way, believing that it's going to come down and test here tomorrow. But if it breaks out to the upside, that'll be favorable. So this is truly a compound critical state for us. In the 150-day look back, so that's this 50-day look back, and these are all your 30-day chunks right here. And this 30-day chunk we've broken out into the 10-day chunks and a 5-day chunk. So you can see that we are stuck right in the middle of this Godzilla move, right in here. This whole Godzilla region is just screaming for some resolution. Vicious chop. The breakout out of that, let's call it that 10-day trading range, is going to be large, but it's this may end up being what it's like all the way to the election. Would not be surprised at all, staying in Godzilla and favoring the short-term unbiased trader. Would not be surprised at that at all. All right, let's look at the sectors. Still not letting me draw. I don't know why. All right, so the S&P was at 0.84. The Russell was weaker at 1.27. Treasuries down at 1.71 for the weakest, and they're at 90, basically 95 now. Stronger was tech at minus 0.51. Diamonds at minus 0.34. And emerging markets were the best of the indexes at a positive 0.64. Here was the cut line between gains and losses. So let's take a look at the winning positions from the top. Marijuana. Now here's all our metals: Alcoa, U.S. Steel, and Cliff Natural Resources. So they all moved together. Alcoa was even a bigger mover than U.S. Steel, but as you saw, we'll take 19R out of U.S. Steel and be happy. Squarespace was pretty good. Now, there's Nvidia, the chip maker, 119 or 1.19. Texas Instruments, 0.7. And Intel at 0.31. So all of those, all the metals, all the semis, much stronger than the market, and that's where those big moves come from. Brazil was very strong. Again, that's the only global index that's really bucking the trend. Brazil and Latin America, which it is a 40% component of, by the way. Ethereum and the Aussie up 0.85 and 0.5. Let's check the underperformers, the sad stories. Bitcoin minus 0.8. Lithium and oil exploration off 1%. Staples and finance and consumer discretionary down 1.4, 1.6, and 1.9. So all getting smoked. Rivian, Robinhood, and Clean Energy minus 2.5, minus 3, and Tesla obliterated at minus 6.6, testing the key price level of 200, and it's down here at 207. So pain and suffering, they all are abounding. So let's check the traders today. See how they did. Stand by. All right, so this is Nolan getting caught in the chop. He's doing a good job minimizing his losses in here, but uh, he believes he's stuck in the chop and then misses the moves and then waits to chase. So uh, that happens if you are expecting these to work. And then when they don't work, then it's like, oh man, it's just not working today. And so that must mean that's it. And then you're not prepared to keep taking the shot. So if you take this shot just like you're supposed to, just like you were doing, that's going to pay off. That's the lesson. They all look the same leaving the station. Here's Arch with 3.5 in the Aussie dollar. Takes the Kata 2, quick exit. This should have been a re-entry here, which paid off. Quick scratch. Now this one pays. Quick scratch. This one pays large. There could have been a second entry here. Brings home 3.7. Nicely done. Devon Energy and Tesla for Woj. This one minus 1.5 because he's chopping around here, but keeps firing. Keeps firing here for 1.1. But in the interest of finding the mover, by having a variety of things that you can shift to that are uncorrelated, XRP not much. Luna gets a nice payoff in here for 0.7, and then gets 8.7 in Solana. Finds the mover and exploits it for a total of 8.5 for the day. That's how you do it. You have to have non-correlated symbols that have an expectation to move. The reason I go through the report the way I do is to be prepared to find the mover. There's a certain value in trading the same symbol all the time, but then you are held hostage by its movement cycle. So I like to find uncorrelated elements that are in a position to be prepared to move, and I wait for them to move and then try to jump on them. In the meantime, I have my standard movers that I can trade, but my job is to use my radar screen to find the movers and then get on them. Once you start mastering the patterns, that's your next task is to have a small herd of standard movers that are not correlated and find the ones that are in critical states and be ready to trade them when they start moving. That's the lowest risk trade of all. Let's get the report up here. All right, let's go to dashboard 1 on the daily. We're still in bearish volatile. The sell-off today, as you can see, was problematic. Stupid. In the Dow Tactical, lots of dojis today, a couple dead cat bounce warnings here in IBM and JP Morgan. To me, Tesla is the news. And the metals, you can see Alcoa crushed it today, and I'll be ready for some more metals tomorrow. In the ETFs, handful of auto framers looking good. Treasuries continue to get crushed. On the auto framer, I'm looking at the framing data for swing trading one day at a time. I'm concentrating on the minimum 2-to-1 reward to risk ratio. Treasuries, Tesla, emerging markets, all are looking attractive on that chart. McDonald's in a tight squeeze along with Johnson & Johnson and ExxonMobil. I like Brazil when it's very squeezed like this at 1.8, and it was a big mover to the upside today. That's a stealthy move tomorrow waiting to happen. In the sniper system, just so many good Godzilla patterns to choose from. It's not even funny. Treasuries, clean energy, and Ethereum. Godzilla trades in the tactical symbol set, so plenty to choose from here in the S&P 500. The one-day movers, you can see just how many of them today had one-day percentage moves larger than 2 sigma. AT&T, for crying out loud, 4.5 sigma. There's DuPont, Freeport Moran. Lots to choose from in there. Auto framer stats from the TC2000 bundle. And then the sniper stats for the tactical symbol set sorted by the descending 5-day volatility score. Look how volatile treasuries. They're just getting smashed. Real estate, the Russell, Tesla, and EWZ, and Alcoa. That top 6 right there ought to really tell you something. And now look at the size of the one-day move in Alcoa. That's what we mean by finding the movers. U.S. Steel had a 1.4 sigma, so Alcoa was just off the chart good today. I was busily engaged with U.S. Steel, so I didn't get any of Alcoa, but here's the daily chart on Alcoa. Massive good. Oh my goodness gracious. Yeah. This will just make you sick. That's a move. If you play the OR3 breakout, you're getting an entry right around 36, and that thing does nothing but move straight up until about 41. So that's a $5 move, and Alcoa has a R10 of 40 cents. So that's a 15R move. Find the movers. I don't know. I'm trying to find a simpler, clearer way to say it than find the movers. Look at the PSAR flips. Stare at that chart for about 5 minutes. All right, that's everything we got for today. We'll get this published and posted. Let's find the movers tomorrow and smash these.